Are you using Stripe or Square because they gave you a custom rate? Or maybe you're processing through your bank or a direct acquirer. Today, I'm going to go over 3 credit card processing tips that I've seen end up saving small businesses thousands. But hey, if you don't mind pouring money down the drain, I linked the listing of boats being sold down in Florida in the description below. But for everybody else, by the end of this video, you'll have something interesting to share at your next BNI. My name's Ivan Iglikov. No, I don't work for the CIA, because I have this weird passion analyzing credit card statements, which came to me while I was door knocking as a merchant services agent. Yeah, that used to be me. I found that I love going over real statements with people, showing them all the schemes and tricks processors use to make an extra dime off their back. Usually, the best way I found to show you all these tricks processors use is to actually go over real statements with you. But today, we're going to go over some basic tips. What most people don't realize is that credit card processing is the only unregulated market in the American banking sector, well supported by lobby groups. Credit card processors purposely craft their statement to be too deceptive for obvious reasons, to the point where even a business accountant can't figure out what they mean, how they work, or where crucial contractual information is hidden. So let me not waste your time, and let's dive in. If you process over $100,000 a year, consider moving away from payment aggregator. Payment aggregators are not payment processors. Services like Stripe and Square are very easy to set up, but as your business grows, so do your chances of receiving chargebacks and suspicious transactions. Aggregators are much more likely to freeze your funds after this or terminate your account altogether. These are growing pains that are easily avoidable. And payment processors are typically much more competitive on price once you reach $100,000 a year in revenue. Don't process with your bank. Most small businesses assume that if they're processing with their banks, then they're in good hands. Banks don't actually process payments. They're just a middleman. So cut them out and work directly with a processor so you can get a better deal. Working with a direct acquirer does not mean that you're going to get a better deal. There are only a handful of direct acquirers in the United States and thousands of ISOs that are just processors that resell the services of these direct acquirers. The thing is, direct acquirers resell their wholesale services at such a low rate to the ISOs that, for instance, an ISO reselling First Data can easily undercut First Data Direct. These are just a few quick tips that you can use to better navigate the jungle that is credit card processing. Feel free to subscribe so you can see some upcoming examples of the situations I mentioned earlier. If you think you found something wrong with your statement and would like my help, you can click on the link below for an in-depth analysis, or just send me an email at info@ivaniglikov.com and I'll take a look at it when I have the time. Good luck, stay safe, be good. That was me, Ivan Iglikov, your friendly Russian.